Aduro Clean Technologies just reported its financials. So in this video, we're going to go over how much revenues it made, what the burn rate is, the cash level, how much do they have enough cash to accomplish this or that. But before we do this, if you're new to this channel, Aduro is one of the companies that I talk about on this YouTube channel. And if you want to learn about it, I suggest you go to my YouTube channel, then go to the playlists. Under the playlist, you can see I have 63 videos. I suggest you watch them. It's a lot of due diligence, but if you want a shortcut, I would send you to the following two videos. Top stock for 2024, that's Aduro, and also this video, Got Aduro. The company has solution to worldwide problem, Aduro Clean Technologies. This video is kind of like a summary of the first 5 videos that are on this playlist. Okay, let's go to the financials. And you can find these financials on Cedar Plus. Everything is in Canadian dollars. Okay. First, balance sheet. It ends on November 30th, 2023. As you can see, cash is at $2.3 million. 6 months before, which ended on May 31st, they had $4 million. So the cash went down from 4 to 2.3. Where did the money go? Okay, so first, let's go to the income statement. As you can see, this company started to generate some revenues, but it's still far away from being profitable. Of course, we know that. So for 3 months ending November 30th, the company generated $73,000 of revenues. And for the 6 months, it generated $131,000 in revenues. Now, going forward, this number is going to get bigger. Why? If you look at the company's press releases and you go down to October 11, this is where they brought in, is excited to announce addition of 2 new participants to its customer engagement program. So, of course, this was October 11, which is before November 30th, right? But it's just starting to ramp up, and there will be more clients into the testing program, which will generate more revenues. So that was on October 11. And then if you go to the press release a little bit after, which was on November 30th, right, at the end of the reporting period, you can see that Aduro Clean Technologies expands technology evaluation scope with leading petrochemical company. And in here, it said that the expanded scope will provide important data that will support the company's development and scale-up program, as well as increase in respective project funding committed for phase 1 testing by 450%. So this particular client is happy with the results and is increasing the budget by 450%. So therefore revenues are going to go up. Okay, so that's on the revenue side. Now on the expense side, you can see that the expenses increased from the same reporting period or 3 months in a prior year. Research and development increased from 437 to 628. General and administrative almost doubled from 478,000 to 871. Then this is non-cash based compensation. This is non-cash amortization. So it's really that these top two that matter. And so that's where the money went. And also, but this is on the income statement. Also, we have to go to the cash flow statement because we have capex. And it's under investing activities, property, plant, and equipment. So this is for 6 months, while the income statement was for 3 months. It was broken down. And as you can see, so this is capex. For the 6 months, the company spent $830,000 on property, plant, and equipment. What is that? Well, remember, R2, right? R2 for plastic and bitumen, and also the lab. And both of them are now done. So the capex associated with the lab and R2s is pretty much gone going forward. There's going to be other capex in the future because they're going to be doing R3, but for this, it's done. So if we take these numbers, I'm going to edit 628, 385 plus 871, 049. That is 1.5 million. And if I divide it by 3, that means that the burn rate is $500,000 a month. And again, if this was continuing, the capex continuing from R2s and from the lab, I would obviously add this additional money, but it's not continuing anymore. Therefore, I'm not going to add that. So that's the burn rate, $500,000 a month. Now, if we compare it to the cash that the company has, you can say, okay, 1.5 million per quarter. That would mean that they don't have enough cash to last 2 quarters, right? If you only look at that. However, so that's 2.3 million. I'm going to write it down. 2.3 million. If we go to the management discussion, which is on page 16, subsequent events. In other words, after the reporting period, we can see subsequent to November 30th, all of these warrants have been exercised. So you can see 250,000 warrants were exercised at 50 cents. And because this is all in Canadian dollars, because the stock price today, it's about 130, well, of course, the 50-cent warrants are going to be exercised. 708,000 warrants were exercised at $1. Dollar, it's in the money. 75,000 warrants were exercised at $1. 50,000 warrants were exercised at $1.30. Remember, recently the stock reached as high as 160. So 50,000 of these warrants were exercised, I assume probably during the time when the stock was higher. If it was today, they wouldn't be exercised because the price is pretty much at the same level. Then 80,000 options were exercised at 75, and then 75,000 options were exercised as 105. So the company, after the reporting period, received $1.1 million. So if we take 2.3 million, which we have on the balance sheet, 1.1 million, 2.3 plus 1.1. That takes us to 3.4 million of cash. So now, if we take the burn rate of 1.5 million per quarter, now we can see that the company has enough money to sustain itself, pay the bills for 6 months, right? But that's not it, because just above this is a summary of the warrants that are outstanding and they haven't been exercised yet. And as you can see, all of these here are expiring in 2024. All of those highlighted have an exercise price of $1. And some expire in April, most of them expire in April, and some expire in July. So because it's a $1 exercise price, it's an easy calculation, because all we have to do is just add these and we will know how much company will receive when those warrants are exercised. So let me do the math. The total for this is 3.65. So we have to add it to 3.4 million that I had before, plus 3.6 million. So 3.4 plus 3.6, 3.4 plus 3.6. That takes us to $7 million. $7 million of cash that the company will have once all of these are exercised. Then we have the follow. So up to now, that 7 million that I'm talking about, if the company is burning 1.5 million per quarter times 4 quarters, that's 6 million. So this 7 million is enough to sustain the company for more than 12 months. After the 12 months, you can see there is more warrants that are due in 2025, right? So we have those 50-cent warrants, right? 50-cent warrants. So let's do the math. From these, that's additional 1.1 million. And then we have $1.30 warrants. So let's calculate that. That's additional 2.8 million. So if we add 7 million plus 1.1 million plus 2.8 million, that is $11 million. So they're sitting pretty nice. And of course, the stock price has to stay at this level and go higher. And I suspect there's going to be lots of news flow. We need some news flow. And I don't think this will be a problem. And now, going back to the income statement again. So why did the research and development go up and general and administrative? Well, they hired more people, right? We know that. They hired more people, and they also have more clients. So they're testing more clients. So the revenues will go up, and the revenues will help offset some of the burn rate. The cash in the bank that they reported at the end of November is 2.3, but with what already got exercised, that takes the balance to 3.4. And then when more warrants get exercised, that takes the balance to 7. And then in 2025, that takes it to 11. So there's lots of cash coming in. But at some point, if we go to the investing activity, at some point, the company will restart the capex for the R3. So right now, the capex is going to go down. But then R3 will cost 5 to 7 million. Now, the 11 million the company will have of cash over time with what they have in the bank and with all these warrant exercises is not enough to build R3. So where's the cash going to come from? Well, there's more likely at some point in the future will be another private placement, for sure. I don't know when, but there will be, probably. Or maybe there won't be, because you might have a major that is testing with them. They might make an investment. They might finance the 5 to 7 million of expenditures associated with R3. That's a possibility. Grants is a possibility. So that's where it is. So that's it for this video. In summary, the company has enough cash in the bank plus the cash that will come from more warrants to last it more than 12 months. The capex associated with R2 and build out of the office is pretty much done. They are in the middle of designing the R3. When the capex will start, I don't know. But that R3 will cost 5 to 7 million, and money for that, will either come from future private placements, investments from major companies, or grants. So thanks for watching. I hope this was helpful.